morning, everybody. Happy Monday, and I hope you guys are having a great morning. Welcome back to the Everyday Growth Advisors pre-market live stream, and it's a new ticker Monday. I hope you guys are ready for this beautiful day, a beautiful week. It's going to be an interesting week this week, and congratulations to everybody who has been tuning into this stream for the past 4 weeks, 3 weeks, for however long that we have been chanting that buy the Dow. It is finally paying off, right? All those streams, all the listening, all the trusting, it is finally paying off. If you have been listening to the stream for the longest time and you've been following along with what we've been talking about with this financial markets, you have heard me say a million times that buy energy, industrials, and consumer staples, which have all rippity-ripped, and we're about to open up green this week. Especially with XLI, which was a clear trade that we wanted to take, and we are approaching our target for profit taking. We did say we want to play this up to about $76 or so. We came down. We came from the dip over here. I bought in about a couple of $100 worth of contracts, and now just riding up this dip to the top here to the 76 level. So we'll be taking profits on those shortly. We don't want to risk it for the biscuit. What we will be doing here will be shortly just taking off some of our contracts, letting the rest ride for free. Yes, that is the name of the game. We want to reduce our exposure, take the profits off the table, and ride the rest of them so that we don't have any exposure, but we have all of the upside. So welcome into the stream, guys. Good morning. How are you guys doing today? Thank you for taking your time out for being here. I know it's tough. It's wee hours of the morning, but always remember these streams are really, really gonna pay if you listen, right? We have a pretty jam-packed schedule today, so I'm gonna try and get through as much as I can. Definitely gonna be doing a new ticker Monday with Exxon Mobil, which is the ticker we'll be kind of covering this entire week. So Exxon Mobil is going to be the ticker for the week this week, as you guys have voted on Friday, which was a great choice in my opinion. And it's just a perfect stock to play right now. Okay, and I'm about to show you why. It's a great leap to buy as well. So a long-term investment. You could definitely buy some long-term options contracts and then hedge it to the downside as well. So I'll be talking more about how to hedge it to the downside a little later. But we'll talk about, let's go through the pre-market analysis first. As you know how we do, we go right to the news. We have a look at it, not because we enjoy reading the news and not because we're going to act on anything that we read over here. We read it because we want to find out what retail traders will be reading. And we want to behave exactly opposite of how retail traders view the market. Why? Because that's exactly what institutional investors do. They try to screw you. And instead of being the screwee, let's be the screwer. So join my side as we try to navigate these markets here. One of the advantages of being here is you don't need to do any of the work. You just sit back, enjoy your coffee, sip on it, have a little bagel with your cream cheese or jam or whatever that you will, and enjoy while I break down the market for you, and take in everything before you get ready to demolish this absolute bull market that's going on. So a little bit of some sanctions that are going on. The U.S.-China tensions still continue here, and China's now hitting back with some sanctions on some 11 or 12 key politicians, I want to say. So because of Hong Kong and stuff like that, which these sanctions and all these political things are going to continue to go on as the U.S. is going to continually put pressure on China. U.S. futures here steady as Trump extends economic aid. So now the unemployment for people have been extended. I believe he made it $400 a week, and then also forgiveness on certain things. He's extending the student loans, like the interest on them, forgiving them, and then also a bunch of other things. You should definitely read up about that. Market's definitely going to start behaving irrationally here, but it's going to be interesting to see what happens. So I'll give you my breakdown in a second here, but let's actually get through this news so that we can actually figure this out together. And then Hong Kong bankers move to suspend accounts on U.S. sanctions. That's going to be a pain, right? Jimmy Lai, okay, Tencent shares lose $66 billion in two-day rout with the WeChat ban in America. So people panic selling Tencent. Now, the funny thing is, I view this as an opportunity. I think Tencent is a solid company. I don't think that the penetration of WeChat outside of China is going to affect it that much. But we can have a look at this when the panic selling is over. I'd rather not catch a falling knife, which is to say that if the stock price is going down abruptly, we don't want to try and catch it, right? We want to wait for it to go down all the way and then bounce. And then when it shows signs of a reversal and makes one of these waves, we'll get in on the second wave and ride that thing up, right? Remember, we never want to catch something when it's moving down. You never go against the market, okay? You always go with the trend. The trend is your friend, all right? So we have more on Tencent in the future. Definitely a good stock to own long-term, just FYI. I have it in my long-term portfolio. Just a good share to own, to have exposure in China, especially since Tencent is a major player, okay? Let's see here. Okay. Trying to see if there's anything else here. Bill Gates says U.S. virus testing has mind-blowing problems. Oh, okay. You tell him, Bill. You tell him. Good morning, guys. Hope you guys are having a good day. Welcome into the stream. Appreciate you guys being here. All right, let's look at this some more. Wall Street Journal, let's see what they're reporting here. So, tech, financial firms eye ways to save TikTok's US ban operation. Okay, by the way, news is sounding super bullish, just FYI. Just generally across the board, it sounds bullish to me, okay? A lot of talk about the market rallying and stuff like that, and you know what I say, when investors start to get greedy, that's when we need to pull out. That's when you need to start exiting majority of positions, letting your profits run, and then just taking some free rolls, not really exposing much of your portfolio to the upside anymore, and taking some hedges, right? And we are kind of approaching that level now, okay? I'm going to get to the technical breakdown in a second here. And then there was also news about SpaceX, so expect a sympathy play with space, which is Virgin Galactic. I think there's a possibility that space may kind of rally in a sympathy play. So have a look and see whether that happens today. You never know. Space doesn't need much of a reason to rally. And I'm talking about Virgin Galactic, not SpaceX. Okay. So SPCE is that ticker over there. Let's see here. Big landlord in talks to put Amazon warehouses in malls. Wow. Okay. Interesting. Jeez. That would be... I don't know about you guys, but that is some crazy, right? Imagine walking to a mall and then you see an Amazon fulfillment center. Jeez, that would be interesting, right? And I think that malls make actually a good space for that, right? Lots of ample room to do a lot of these things, and then it has loading docks and stuff like that. Actually, it might not be a bad idea, to be honest. Okay, life without TikTok. U.S. marketers contemplate their options. I am not sure how TikTok became such a big thing. I mean, I've definitely been on the app, but come on, guys, it's not that bad if it goes away, right? I don't know. Somebody in the chat, tell me, is it really that bad if TikTok goes away? Is it really that bad? By the way, if you're here with me on this stream and you're enjoying the stream so far, I'd really appreciate it if you could smash the like button, right? Just smash it. We want to try to get to 100 likes today because it's a new Ticker Monday. And I'm going to be dropping some heat today, okay? So let's get it up to like 100 likes today. That will really make me pleased and happy. And I would really appreciate it. So take a second out. Just hit the like button. Subscribe if you haven't. And yeah. Okay. Qualcomm lobbies US to sell chips for Huawei 5G phones. Huh. Okay. Interesting. Okay. Now, let's get out of this real quick. Pre-market movers. Foot Locker. Holy moly. Up 18%. Jeez, I wonder why. Let's have a look later. I'm going to have to look at this one because I was actually bearish for this ticker for a while. I didn't take any short positions, but I was expecting to buy some when it hit like about $28. Let's see what happened there. Gates, okay, whatever this is. Willis Tower Watson, okay. Simon Property, that's probably going to be a REIT, if I'm not mistaken. Word2 Financial, Bill.com, Pinterest up on, I think, a positive beat, was it? Las Vegas Sands Group up 4%. Okay, biggest losers, Rita Pharmaceutical, something like that. Royal Caribbean down, HR Block, this is an accounting firm. Whirlpool, okay, interesting. All right, a couple of things that we should be watching there. By the way, if you're here for this stream today, just want to let you guys know that tomorrow we will be doing an entire webinar dedicated to building your watch list, okay? And I'm not going to leave any details behind, okay? I'm going to give it to you like I know it, all right? If you want to build a watch list, how do you use pre-market movers to build a watch list of your own, okay? And that's going to take one webinar. And then on Thursday, we're going to do a webinar on how do you play the breakouts, okay? So the different patterns that you can use to play the breakouts of your watch list. So this week's webinars are going to be heavily concentrated on giving you information on how you can create your own watch list and how do you use your watch list, okay? I'm not going to leave any info behind. I'll put it all on the table, all in for you guys, okay? So definitely come through for the webinar tomorrow. Don't miss that one. But even if you do, it's going to be recorded. It's going to be put up on YouTube. It's going to be free for everybody. Please come through. You know what this channel is about. I am all about giving free education out. So if you like that one, smash the like button. Just smash it on the basis that I'm doing something like that. Thank you, guys. Okay, on investing.com we have, let's see here, Trevina, ignore that one. Cirrus Therapeutics up 254%. Kawabanga, woo! Top ships up 1,000%, but that's a dollar stock, so not really interesting. Ebo Inc., whatever that is, Therapeutics. Lots of pharma companies today getting just bada bang, bada bing, man. Wow, look at these. Jesus. Whew. Such big players. The Dow Jones here, let's see. Any big movers? Not really. Boeing up about 1.5%. Pre-market at 172. Congratulations if you played Boeing with me as well. Getting pulled up by the entire Dow Jones Industrial Average. I'll take it. Remember, we have been talking about Boeing for a long time. I'm about to show you why about Boeing as well in a second. Let me just get through majority of the content that I have over here. And then we're going to talk about Boeing. We're going to talk about a couple of things over here. So I'll talk about Boeing right after this, by the way. Okay, Exxon Mobil up a little bit here to $43. So pre-market top gainers on the S&P 500 is part of it, actually. So we might be actually covering the stock at a pristine time. The last time we played Roku while we were covering it, that was nuts. And we did an intrinsic valuation on Wednesday. And then on Thursday, Roku stopped just shy of our intrinsic valuation. That was nuts. I don't know if you guys remember that. Okay, I just want to point out one thing about Boeing, which I highlighted to the option swing committee sometime last week on our technical analysis series channel. Okay, have a look at this and tell me what you feel. I feel like I also spoke about this on a live stream, but I can't remember. I'm just going to repeat it anyway because I don't know if I actually did speak about it. But look at this over here with a recurring pattern that Boeing did before, where it broke through this wedge support, right? And then kind of did is kind of V-shaped thingy for a while, and then boom, right? And look at what's happening now again. Wedge pattern, broke the support there, and then came back up, and now is attempting to do the same thing. Okay, now obviously we can't say that it's going to happen again, but seriously, guys, this is interesting. Okay, it's super interesting. Now, I'm not saying that Boeing's going to go bada bing, bada boom, right? Like that. But, you know, things do tend to repeat themselves, okay? And if we get some bullish news about FAA or, you know, something that Boeing does, then, you know, it's going to send the stock flying. Now, I'm well positioned for this. About 7% of my portfolio is in Boeing right now. And I have contracts for, let's see, 11/20, which is November 20th, 210 calls, okay? And then I also have some 6/21, so June 2021, $300 calls, Okay, and these I got really cheap. These are already up about 200%, which is really cool. So I'm playing this on the on you know a big rally up here, which would send both of those contracts up significantly. Okay, and what I intend to do is, if Boeing falls, what I'm going to do is turn those into a spread. Okay, and then hedge my downside. So there are many ways that you can play this. Obviously, don't take a naked call and do that, right? You can absolutely buy some calls, but just make sure that you are doing your risk mitigation. Okay, so looking at this once again, looking very interesting and very promising, and we'll see what happens to Boeing, but I like where we're going so far, so let's just continue with that. Okay, I'm not gonna do anything as of yet. Let's see here. Ooh, lots of you talking in the chat today. All right, I'm going to read this in a second here. Let me continue with my analysis here. Okay, so back to the SPY-in analysis here, the SPY, Dow Jones, and the NASDAQ analysis, which we always do here. Let's have a look at what's going on, how we've been reacting. For the past, I don't know how many weeks, I've been talking about how Dow Jones needs to catch up with the rest of the market, and it's finally doing that right now. Right? And I did say that this is all going to happen at the same time. I mentioned it multiple times. I said, when this kind of a out of sync happens, right? A out of sync, okay? What usually happens is that all the things that are out of sync, SYNC. I obviously can't spell today because I'm tired. But when things are out of sync, they tend to rush up all at the same time, okay? And since Dow has a lot more to catch up than SPY, which is now approaching all-time high again, look at this, right? Where we came from. Coronavirus dropped 30-some%, right? I think it was 36%, right? And now we are almost recovering, right? We're recovering. This is why I keep saying the economy is not the stock market, and the stock market is not the economy, right? Ignore all the crazy lines that I have here, but you guys understand that SPY is almost back at all-time high now, right? We just have a little bit more to go. Now, this will be a significant level to breach because we're going to break out into all-time high. Now, if that happens, expect a continuation to go, okay? Expect a continuation. But I do absolutely think that what's going to happen here is we are going to see an attempt to breach this level. And we may breach it on SPY, okay? But it may be one of those things that is a bullish breakout that results in a rejection followed by a retracement to trap some overly optimistic traders. Okay, so expect something like that. And when I say something like that, this is what I mean. Okay, where we were trying to break this level here, we broke out above it, right? And then instead of like keep going running, we correct back down to the moving averages or below the 150 moving average or so, and then continue chugging along in a upward channel. This is very likely, okay? Because market makers are going to be extremely greedy over here. And what they're going to do is they're going to try and stop out any trader that is overly bullish on this side. Okay, so be very careful of that. Now, when SPY is approaching this level here, the 3384 or 33, let's say 3400 level, right? I'm talking about SPX, by the way. Be extremely careful, okay? So, in fact, it wouldn't be a bad idea, as I've been saying, to pick up a couple of cheap hedges on QQQ, UVXY, hold them, right, for a month out, okay? And then just hold them as an insurance contract. And if it pays out, it pays out. If it doesn't pay out, then whatever, you lose the money. It's part of your trading process, okay? Because if you're overly bullish and you don't hedge to the downside, what's going to happen? You don't have any protection, okay? And what do we say? We never want to go into this market without protection, okay? So make sure that you're protecting your portfolio. If you have things on the upside and you're overly bullish, make sure that you're protecting the downside, okay? It's a balance. It's a balance, okay? Now on the NASDAQ, we're looking at a kind of a phase where tech is overheating. What I see over here is overheating, okay? Overheating. Now, I've talked about this before, where I see that risk flows out of NASDAQ into the Dow Jones, okay? Into the Dow Jones. It's highly possible, okay? And what that is going to do is the money from tech is going to flow into industrials and into energy and into the most beaten down sectors in the stock market. And I see that happening. Okay. Now, if the Dow breaks above this very crucial level here, with good volume, with good momentum, we will see the Dow back at all-time high very quickly. Okay. Obviously, we need some kind of a corrective wave. Remember, we have had an impulsive, a corrective, now another impulsive wave has to be followed by a corrective wave down back within this channel. Okay. So expect something like this and then a breakout again to test the top of the channel, and we may just continue going like that until unless we break out of this channel very strongly after a corrective wave that will send us flying up. Okay. Now, another thing that I want to talk about is this. Another thing that I want to kind of get off my chest, which I'm thinking about, is when a vaccine is released, when vaccine news is going to be released into the market, okay, everybody is going to be overly bullish. And I must tell you that at this very moment, when vaccine news is released, I don't know when it will be, but at some point between now till the end of the year, this is going to happen, okay? We're going to have a vaccine on the table that's going to apparently cure coronavirus, okay? Now, the market might rally temporarily, but what you really need to do at that moment is get out of all your long positions, okay? Because let me tell you that when the vaccine news comes out, okay, when the next vaccine news comes out, this is going to trigger a sell-off. Why? Because people are all going to expect the market to rally, but that's when institutions are going to take profits off the table in anticipation of other traders being bullish. That's how things are usually done. When traders are getting bullish up here, this is when institutions are getting out. Okay? And you have to remember this. Whenever traders are buying, people who are retail traders, they are bidding the prices up. And this gives institutions a very nice comfort zone to ask prices that are irrational. Okay? And therefore, the bids that the greenhorn traders put in, right, they're irrationally high, right? So they wanna buy those stocks at irrational levels, and hence the ask that comes on the institutional side are also irrationally high. And so this trade-off gives institutions a really big bang for their buck, okay? They could earn up to 20% additional margin on simple trades that they want to take. And this is when market makers also are overly greedy and go in a frenzy, okay? So whenever any news of the vaccine hits, I say that is a big signal for you to temporarily bow out, take profits, or let your trades that are free roll with stop losses. Okay, that's a majority of the technical breakdown that I want to go through today. Thank you for attending the stream, guys. Welcome in. Hope you guys are having a good morning. If you could actually smash the like button, I appreciate that. Make sure that you guys are tuning into the stream tomorrow, and on Thursday we have a special webinar. If you missed it, we're going to be talking about watch lists this week, so definitely tune in. And if you like the way that I do things and you enjoy it, definitely tune in and come back for more. Okay. All right, let me read some of these things here before I get into Exxon Mobil here. So I really hope we can get to 100 likes today. You think we can do it? I don't know if we can. Let's see. I'm going to throw you guys a little bit of a challenge there. Let's see if we can get to 100 likes and see if we can do that. Good morning. Good morning. Happy New Week. HD. Okay, we'll see if we can cover some tickers today. XOM. Ooh, already somebody who's playing XOM call. I like that one. Too late for XLI. Just a rule of thumb. If you have to ask if it's too late, it's too late. Insights on leads for Microsoft. I'm in 250 calls, January 2021. Want to know if TikTok makes or breaks Microsoft long term. Okay, we'll talk about that a little later. Hey, good morning. Good morning, Francesco. What's up, man? Welcome back to the stream. That SPG with Amazon could be huge for them. Yeah, that's Simon Peterson group, right? Yeah, I thought so. Get it out. Hell yeah. Would be like a bad rash going away. Okay. TikTok is for children. I agree. I do agree. I could care less I could not care less about TikTok. Douglas, I can't say I disagree, but some of the stuff on there is quite entertaining sometimes. Dude, what about all the teenagers who made careers off it? You see, I don't see that. Like, okay, realistically speaking, if you had like a million, I don't know, a million followers on TikTok, right? Well, what kind of power do you wield apart from being an advertiser or an influencer, right? And then what sets you apart from the people who are on Instagram doing the same thing? That's my question, right? TikTok is just a big waste of time. Who cares about it? I can't disagree there. Okay. Buenos dias, buenos dias. New here. What do you use? Webull, TS, or Robinhood? Right now, I have to use Robinhood. I am bounded by Robinhood. I'm going to be setting up a Thinkorswim account with the Singapore satellite office, and let's hope that that goes through. Yo, what up? Sorry, I'm late. Welcome into the stream back, Taylor. Nice to have you here. Okay, let's go Boeing. Hell yeah. JSP is not supported by Robinhood. Very interesting. Okay, let's see here. We all love BA. That's true. Bro with the sniper calls. Love how you explain that spy movement. Absolutely, Taylor. That's what we do over here in the Everyday Growth Advisors live stream. I really hope that you guys have enjoyed it so far. We're about to cover Exxon Mobil here in a second, right after I read some of these. We never want to go anywhere without protection. Absolutely. Okay, let's see here. Thanks, thank you. Okay, cool. Yes, great Sensei T. Good morning. I'm not Sensei, man. I'm just a regular guy trying to help you guys out. That's all. Okay. Hey, buddy, you're in Singapore. I'm based here. Dude, message me on Discord if you're part of Option Swing. We should definitely hang out. I actually met a bunch of Singaporeans who have been attending the live stream every day. We went to Fullerton and we had a meal, and I'll be happy to buy you a meal. Come through, man. All right. Now, let's go over Exxon Mobil, because this is an interesting one. Now, Exxon Mobil is particularly influenced by the price of oil. And many of you know that I have had a very bearish slant on oil. If you have been following this channel for a while, you would know that I have been bearish on oil. But right before I continue here, I'd really appreciate it if you could smash the like button. Leave a subscribe if you haven't. If this is your first time here, definitely subscribe. We do this every Mondays through Fridays now. So smash the like button and show some love. I appreciate you very much. Okay, the story about Exxon Mobil goes a little like this. Now, it's a company that specializes in petrochemicals, in crude manufacture, in a bunch of different things. Okay. Now, upon doing my analysis, which I was doing for you guys over the weekend, and you see by the number of tabs open that I've been really furiously trying to find something on this. It's actually a pretty interesting situation, and I think that this is a very good long-term buy and hold, okay, for the situation that we are in right now. Okay, and I'm about to explain to you why. Okay, so my thesis is long Exxon Mobil into the long term till next year at least. Okay, and so here's what I see. Okay, first things first, you have to think about the environment that Exxon Mobil operates in. Okay, its revenues are not just supported by one thing that they sell. They do a bunch of different things. Okay, now I happen to find this really great article written by Andrew Sather, so full credit goes to this guy, because he wrote a really great standout article here about Exxon Mobil on August 10th. And I'm about to show you guys what I found from here and then put it together with my own analysis to paint the picture to you. I also combed through the 10Q to have a look at what and how they have been performing, which is actually, it wasn't really a good quarter. It's one of those quarters that they really just want to forget and move on. Okay, their margins were down. Their, majority of their sectors were hit big time. Okay, but that's because of COVID and a bunch of other things. Now, about 16 weeks ago, I put out an article on a quick update on Instagram about crude oil. Okay, and how I was expecting further downside. And the idea was about the continuation of the oil saga and how, I wanted to do a little bit of math to show you guys why oil prices will not improve, anytime soon. Okay. And so the reason for this was very simple. If you do the mathematics, right? the demand for oil has fallen about 30 to 35% ever since coronavirus has started. Okay, and so we need to balance supply because demand has fallen, and we need to be at about 65 million barrels per day. However, right now we are producing about 95 million barrels per day globally. What does that mean? We're at an oversupply of about 30 billion barrels, which is why the price of oil is oversupplied, right? That when oversupply happens, what happens to the price of oil? It drops, right? More supply than demand causes prices to come down, right? Now, the thing about it is the major oil producing companies in the world, which is commonly referred to as OPEC Plus, which is all of the oil producing countries in the world. And what makes our OPEC Plus is Mexico, the US, UAE, right? Now they agreed to 3 cuts, okay, the production cuts, which was an aim to stabilize oil prices, okay. But the thing is that I've explained this multiple times that there are not many nations that can survive a oil price cut, okay, because there is a cost basis to producing oil, okay. There is a cost basis, and and Russia is also included in this, by the way. Now, for Russia, they have a very low cost basis. The US is kind of like in the middle. But the thing is that the US has very quickly now become a net exporter of natural gas. Okay, so they do net exports, which means to say they produce more than anybody in the world due to their, couple of years back, they unlocked a method called fracking. Okay. Now, all these things are relevant to what we're about to discuss this week because these things are all part of the oil equation, okay? And then you have UAE, which has relatively low, relatively low cost basis, okay? But they aren't able to sustain this until and unless the oil prices stabilize. So that's the reason why they agreed to a oil cut, okay? Now, let me show you what this looks like. So, let me just continue what I was doing here. So they proposed a cut of about 9.7 million barrels per day, and then another 7.7 million barrels, and then 5.8 million barrels. This brings the total daily output to 7.2 million barrels per day. And this was supposed to happen in 3 separate tranches into 2021. Okay. Now, the thing about it is that over 2 years, which is when they predict the supply to be cut, is a pretty long time, okay? And more importantly, you really can't predict how demand goes, right? We don't know what the new normal is, so how do we predict when oil prices are going to stabilize, right? So with the new adjusted output of 71.8 million barrels per day, we're still oversupplied by about 6 to 7 million barrels per day. Now, I know that doesn't sound a lot, but it is, okay? And then remember what happened. Right after this happened, what did we have? We had a problem with storage of oil, right? There were storage problems. Why? Because they were overproducing and had no places to store, right? Look, I even mentioned it. I mentioned it in my analysis. Oil requires specific storage facilities, and those cost money to run and maintain, causing distress to oil-producing businesses. Hence, expect the excess supply to cause additional storage problems in relation to cost. This is literally before any of that happened, okay? I already spoke about this, okay? And I said, even after we top off reserves for our countries, the companies may struggle to contain the glut, okay? So we spoke about this for a while, and it's going to continue. So here's a chart, quickly Excel sheet that I had created at that time to show you, what that looks like. So we had an old global demand, 85 million barrels per day. The new demand is now 65. This is basic math, guys. Like seriously, no hocus pocus, just basic stuff pulled from oil reports from the Seville Cushing, okay? Those are your oil reports, where oil is delivered, okay? You can find out what is the demand, what is the supply. It's pretty simple, okay? And then the proposed cuts were 9.7, and then after H2 we have 7.7, and then proposed cuts after 2021, 5.8. So that gives us a net 71.8. Okay. Now, how does this affect Exxon Mobil? Well, they have oil production, right? But does it make up a majority of their portfolio? That is the question. Okay, that is the question here. Now, the good news is oil doesn't make up all of Exxon Mobil's production. Okay. Now, just right before I get into this article by this guy, which is actually really the cream de la crop here, what we're really trying to discuss, let me just go through a little bit about their second quarter business highlights, because this is important. We'll be doing a more technical breakdown of the fundamentals on Fundamental Wednesday, but just read a couple of these things. If you want, you can go have a look at it and also read these things. So, market prices for crude oil increased following the sharp decline at the end of the quarter. However, average second quarter realizations for crude oil and natural gas were significantly lower, reflecting continued oversupply conditions in the market and the impact of COVID-19 on global demand. Now, obviously, no one's traveling, no one's doing all those things, so there is a lower demand for crude, right? Now, liquid volumes were down 7% from first quarter, reflecting the impact of lower demand, and including economic and government-mandated curtailments. Excluding these curtailment impacts, liquid volumes increased 5%. Natural gas volumes were 15% lower, driven by seasonal demand in Europe and scheduled maintenance. Okay. Now, downstream, they have industry fuel margins, which were considerably lower, reflecting the impacts of COVID-19 on demand for gasoline and jet fuel, which is one of the biggest profit margin products in the oil derivative markets. Now, the company experienced unfavorable market-to-market derivative impacts associated with trading activity, blah, 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 blah. Okay, average refinery utilization was down significantly from quarter to quarter. So let me make this a little bigger so you guys can read it. There you go. Ooh, too big, but okay. As the company spared 30% of its refining capacity over the course of the quarter, utilization increased with global fuel demand. Now, chemicals, which is the major thing that I want to talk about today. This is a 3-star thing that I had to read the entire 10Q to understand, and then I started to do digging, which is when I led myself to this article that really gave me a better breakdown on the situation. Okay, because you know me, I love things that are sold off abruptly and have value in them. And Exxon Mobil is just a gold mine waiting to pop, and I'm about to show you why. So, chemical margins were largely consistent with first quarter. Chemical sales volumes lower, right? However, benefiting from resilient demand for essential products were lower than first quarter, driven by impacts of COVID-19 global demand. The company continues to support COVID-19 response efforts, blah, 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 to increase its monthly production of specialized polypropylene used in masks, medical gowns, and isopropyl alcohol used in sanitizer by more than 10%. Now, I shit you not, guys, I had to read this thing really carefully to find this one bit of information that alone itself is going to be worth playing Exxon Mobil in the next coming months. Okay, this is it, guys. This is the smoking gun. Okay, now I'm going to attempt to draw a gun, and I hope you guys laugh because I suck at drawing guns. But this is my very cool gun. Okay, and this is when it smokes. All right. This is the trigger, and this is the little thing on the back, right? And then you have the safety lock. Okay, cool. That's my gun. Now, this is the smoking gun right here. This is what led me to find out more about Exxon Mobil. Okay, because I was like, okay, so you mean to say that they're increasing their chemical production? Now, why would they do this, right? Why? Which brings me to the article that I read. And this guy is dope because he broke down everything for me. So, welcome into the stream, guys. I hope you're having a great morning. If you like the stream so far and you see what I'm doing and you can see how I'm breaking things down, sometimes it's like finding a needle in a haystack, right? But somebody has to do the dirty work, and that's why I do the stream, so that you don't have to, and I find the needle for you, okay? Now, we're talking about Exxon Mobil, and I'm about to tell you what the smoking gun is. So let's continue here. If you are enjoying the stream so far, leave a couple of fire emojis in the chat. Like the stream. That really makes my day. I really hope we can get to 100 likes today. That would be really nice. And I hope you guys, kind of find this information helpful. If it is, give me some feedback. I'd love to hear from you guys in the chat. So definitely give me some feedback. Okay, cool. So now I found this article here that kind of confirms my suspicion. Okay, and this guy really broke it down. So I kind of found this article and then I was like, okay, I think I need to share this with you guys because this is honestly all you need to know that will help you make a confident bet on Exxon Mobil in the future. Okay, and I'm talking about long term means next year. We're talking about by June or the end of next year. Long-term leaps makes the most sense here. Okay, and I'm pretty sure that because it's so sold off, look at how sold off it is, right? We're looking at a monthly chart here. Look at this crazy drop, right? This is one of those buy the dip moments in like Boeing or like, you know, another very sustainably long-term committed company. Okay, so here are a couple of pointers. I'm going to go through the important stuff. Exxon Mobil's chemical segment, which makes up majority of things that it sells, which are not just petrochemicals, makes up 58% of net income during the times of the lower crude prices. Okay, that is pretty crazy, guys. All right, now inside of its chemical business, Exxon is a clear leader. It's a clear leader in polyethylene production capacity in North America. Now, if you guys know anything about me, I like companies with economic moats. Okay, if something is a leader in something, I like owning it. Okay, and if I like owning it, I'm gonna buy shit tons of it at discounts, right? It's like you're going into 7-Eleven today and your favorite chocolate bar is at a 50% discount. Are you not gonna buy it? Come on, it was trading like $100 and now it's 43. Dude, no brainer, right? Okay, so look at this. Polyethylene demand is expected to continue to grow over the very long term as global economies develop, right? What is the use of polyethylene? Your plastic bags, your masks, your gowns, all the medical equipment, majority of them use polyethylene, okay? And Exxon Mobil's massive production capacity in polyethylene main raw material, ethylene, could both shield against inflation and provide a significant competitive advantage. So here's the breakdown with the proof. And this is what I really love about this article, which this guy put together. So major props to this guy, Andrew Sather, really well-written article, good analysis work here, saved me a lot of time, okay? This is what it takes sometimes. You gotta look out for the right information and present it in an accurate manner, okay? So, when the price of crude oil takes a beating, it's natural for investors in oil and gas majors like Exxon Mobil, Chevron, and Royal Dutch companies to worry about the damages to this commodity business. And especially the case with Exxon, the health of the dividend. Now, this is another thing that I need to talk about right now very briefly. Exxon did not cut its dividend. It maintained its dividend at 86 cents for this quarter. Despite having a major downturn, it maintained its dividend because it wants investor confidence. Okay? Now, I know it sounds crazy, but they maintained their dividend. They should have paused the dividend, okay, which would have irrationally, obviously, propped up the stock for a while, but they paid the dividend out, okay, which is crazy. They're obviously expecting something, right? Now, it's during times of price turmoil, that they need to take an integrated approach. Investors seems bloodshed, non-diversified, smaller energy plays. The negative impact of not being diversified can be devastating. Okay, yes, quietly, Exxon is one of the best diversified players in the industry. This is to do with the company's chemical segment. This is what really caught my eye with this article, right? Which has historically carried the company's profits during tough commodity cycles when it's relatively small size and earnings power. Okay. Consider just how significant their chemical product segment have been during the last turmoil in early 2016. Look at this. During the last oil crisis in 2016, when there was a commodity scare, chemicals had a 58.9% earnings part of their balance sheet, which is crazy. They have a big margin there. Okay. Now, while petrochemicals sold in Exxon Mobil segment has been struggling as of late, COVID-19 not helping matters, there's still some similar flotation effects to the company's latest Q2 earnings due to the chemical segment. Look at this once again. Now, the upstream revenue at obviously significantly more downstream. Look at chemicals again, performing strongly, okay? Even though it's lesser, it's still performing compared to the rest of the segments, okay? Now, historically 5 years price of the crude oil, okay, and then he goes briefly into a bit here about volatility of crude oil with WTI Brent, okay, and then he says that I'll leave the analysis of the impacts of crude prices, production, exploration, but from the data it's very clear how XOM weathers the rest of 2020 and any continued substantial downward pressure and the industry, okay. Without a doubt, Exxon Mobil is a dominant player in North America in its chemical segment, plastics production, okay? And it could prove to be a fantastic competition advantage both during this crisis and over the very long term. Now, I know that this writer is super bullish, but you should always take what they have to say with a grain of salt and then do your own due diligence, okay? So I'm telling you about this article not to convince you to buy XOM. I'm telling you about this article because what he's saying makes some sense, and you have to go validate what he's saying, okay? So your job now is not to take what he's saying and act on it. Your job is to take what he's saying, discount it, and then go do your own legwork to find out if what he's saying is actually true. Now look at this. As a long-term shareholder of chemical producer Westlake Chemical, which is a competitor, and he's looked through all the annual reports, blah blah blah, okay. And it's no small matter when I say that Exxon Mobil is the dominant producer in particularly polyethylene. Okay, the company laid out a recent production capacity statistics in their latest 10Q. So look at this. Exxon Mobil's chemical segments and sells petrochemicals. The chemical business supplies olefins, polyolefins, aromatics, and a wide variety of other petrochemicals written right here. Okay. Look at petrochemicals. Look at polyethylene and ethylene. They make up a big chunk of this pie, okay? And the total worldwide capacity, they make up 10.6%. And hey, even Singapore made it into the list. Now compare their production capacity to other companies who are major competitors in the North American segment. Look at this, Chevron, and then you have this other company and Westlake. Look at how far ahead Exxon Mobil is. Okay, it's at 5.8 in millions of metric tons. All right. Now, this is why Exxon Mobil is a bit more diversified than the other companies, which presents actually a unique situation where you can pick up shares of this oversold stock up and have a expected rebound. Okay. Now, it's actually crazy that it hasn't been bought up yet. So we're going to do a little bit of technical analysis on this a little later. But look at the breakdown, okay? By the way, if you're interested to know what these are, olefins are your hydrocarbons, which are methane, ethane, propane, butane, used for a shit ton of stuff, right? Petrochemicals are your ethylene, propylene, benzene, super used by a lot of industries, pharmaceuticals, a lot of stuff, okay? It's so crazy that I actually have a chemical engineering degree, so I know a little bit about this stuff, right? Before I got into finance, I was a chemical engineering major, okay? And then polymers, like polyolefins, right? Like polyethylene, these are the ones primarily used in your plastic bags, stuff like that, right? Which can be like easily broken down, easily reshaped, right? Reshaped with heating. Another type, polyurethane is a rigid even with high heat and thus harder to recycle, okay? But as he says, touches almost every aspect of our daily lives, including, for starters, plastic bags, shrink wraps, plastic films, bottles. And I know that there's a movement for Go Green, but look at the projected global polyethylene supply, which is the demand for the next years to come. It's definitely a upward sloping demand curve, okay? So it ain't going anywhere, all right? It ain't going anywhere. And then he goes into a little bit about how it's made in Exxon Mobil, which is not really that important. And then the ethylene capacity, which is the other thing he was talking about. And Chevron does a lot of this as well. And then he talks about ethylene and the demand of ethylene also going up over here, which is robust, right? And then he talks about the risk. There is a risk if Biden wins the presidency, right? Then you have to short energy companies because he wants to achieve a net zero emissions, blah, 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 by 2050. And that's just bad for energy companies who are doing lots of this kind of production, right? And then he talks about the continued low price for crude Brent, right, which is crude, WTI Brent, and how in the months ahead it's still looking bearish. Okay. Now, this was the entire report, and I found it quite informative to think that Exxon is actually well diversified here. So I hope that helps you out to feel a little better about this, to take a bullish position here. And great. Okay, oof, 5 more likes to get to 100. I hope that we can do that. I'm going to try and use as much of my time to reply some of the things over here. So let's see here. Okay, XOM 60 calls for next year. This is a good one to play if you like. $60 calls looks legit. But let's just do a very brief technical analysis here, and let me show you how I get it done. I've actually taken all the indicators out, so I'm not going to use any of these indicators with the supply and resistance and blah, blah, blah. Let's just leave those off for now, and I'll just do a kind of an analysis on the stock without any indicators. Now, the first thing that I like to see when I see, you know, a kind of a movement like this down, very abruptly, the first thing that comes to me as a tool to use is a Fibonacci retracement. Okay, and the reason for this is because we want to see where from the last swing high to low can it retrace to. And so what you're going to do is grab your Fibonacci tool here, and you find the past high over here, and you can find a midpoint if it's easier for you. This is the common midpoint here, and what you're going to do is go from a high, okay, to a low point here. Okay, and then you can actually amend this Fibonacci here if you would like to include negative values or positive values to show extensions or retracements. Okay, so we want to see how much from the bottom this can go to the top, and then look at how much that this 23.6 level here is acting as a support for Exxon Mobil. Okay, now the next level which we will need to breach and then eventually go up to would be the 50 retracement over here. So $50 is a nice little play to the upside if you want to buy Exxon Mobil into the future. Okay. Now looking at other things over here, we can see kind of a head and shoulders forming, right? This is the head, this is the shoulder, not really a perfect head and shoulders, but if this comes up, it may become a head and shoulder, okay? And that's usually a bearish trend if it breaks the neckline, right? But if not, then we may just see another test of the 61.8 over here. Now, the golden ratio, the 61.8 is the most commonly breached level. Now, I don't see any other obvious trends here, but maybe looking into the 4-hour chart, we may be able to find something here, which I don't really see. This is a very strong support level, the 23.6, which is the $40 level. So there are a couple of ways you can play this, okay? You could do a bull put spread, okay, where you sell puts beneath, if you don't mind owning the shares at $40, which I think is a smart play, right? Your initial outlay will be about $4,000 over here to sell some puts. And you can actually reduce the cost of your cost basis by selling those puts because you receive a net credit, right? Now, I do like this play a lot more in case my trade goes south, right? And by selling those puts, you receive a credit. So you're not actually paying $40 per share. What will happen there is whatever your net credit is, you would deduct that from your cost basis to give you a really nice average down trade in case you get assigned those puts, okay, which will make you obligated to buy those shares. The other way you can play this is by taking long-term calls, leaps, right, at a $50 call for next year, perhaps looking at January or even June expiries for 21, right? Those are two ways you can do that. Now, you can also do a spread to the upside, and you can also have maybe a three-legged butterfly, right, where you can do a bearish. Well, you have to do this when Exxon Mobil kind of rallies, okay? And what you can do here is take a call, okay, a call option for your next year leap, and then at the same time do a bearish call spread on the top over here at the 61.8 or even at the 70.5 here, where you sell a call spread. Okay, it's basically playing the opposite here. And what this will give you is a net credit once again to offset the cost of this call. So you're doing a three-legged option, which is a butterfly. Okay, so there are many ways that you can play this. Then you can also do the regular way where you play a naked call and buy some leaps just for $50 calls, $51 calls, something like that. So there are many different ways you can play this, okay, to the upside. Oh boy. Okay, that was a really long live stream. I'm really sorry that I took up all the time and I wasn't able to do tickers. I apologize. I hope this information was helpful for you guys. This was one of the most loaded live streams I've ever done. So I really hope that it was helpful. Let's see here. Okay, I read most of this already. Let's see. Okay, TikTok simply for entertainment. Take it for what it is. Hey buddy, you're in Singapore. Answer to this again. What's your Discord link? Please like the stream, y'all. Thank you for getting me to 100 likes, guys. I appreciate you guys so much. Okay, cool. All right, let's see here. Might be time to write some puts. Exactly. That's what I was saying, right? You could do that. Polyethylene. Yeah. Yo, isn't that what they make skateboard wheels out of? I don't know, man. Maybe they do. Let's hope that doesn't happen. Could you tell us what you think about Chewy? Oof. I unfortunately didn't do any tickers, so I want to be fair here. If you are sitting here having no clue what he's talking about, I recommend taking his intermediate class. Which, by the way, guys, will happen next month once again. So I hope that you guys will consider it. The intermediate course is definitely something that helps you out a lot. Francesco, I'm very appreciate you promoting the course for me. Francesco was in the current wave of the intermediate course, and I think that he really thoroughly enjoyed it. So thanks, T. Smash the like button. Thank you for saying that. GG, T. Good game. It was a good one. I appreciate you guys very much for attending the stream today. More information. Remember, guys, this Saturday we're going to have sign-up starting for the beginners class once again. Okay, I'm going to do another wave of beginners class. I'm going to put out more information. I will tell you guys more about it on Wednesday's live stream so that you guys have more than enough of time to prepare it and prepare for it. And then you can sign up on Saturday on optionswing.com. So with that, I want to leave you guys to a beautiful trading day on your Monday. Have a great day ahead. I'll see you guys tomorrow. Remember, tomorrow, definitely attend the stream. We are going to be doing a webinar on how to build a watch list. Okay, how do you build your own watch list? Okay, similar to the one that we have on OptionSwing. And then on Thursday, we will talk about how we can use that watch list to play breakout strategies. How do you use the watch list that you have created on Tuesday? Okay, and we'll be doing that on Thursday. So definitely attend tomorrow's stream. I highly recommend it. And it's going to be one of those things that you should definitely put on your calendar, turn up. The stream's going to be at the same time. I've already scheduled it on the YouTube page. So if you need a reminder, go to my YouTube page right here. Okay, click on it. And then what you do is go to my, as you can see, I have them all scheduled up here. So the next one here, you can click on set reminder, and then it's going to give you a reminder for the webinars. Okay, so definitely do that. Have a good one, guys. Take care, and thank you for attending this live stream. Yes, the webinar will be there on YouTube. It will be uploaded. Okay, but definitely come through for the live one because I would enjoy interacting with you guys. And I can answer your questions. Okay then, 2 minutes away till ding ding ding. Market's about to open. I have positions to manage, and I'll see you guys on tomorrow's live stream. So have a good day, guys. Peace.